how are you feeling about the market? Before we started the show, you said you gave us 2 thumbs up saying that this is a great market, but you're a perennial bull and we all know that. Realistically, what do you see as the setup here on?
You know, I think the market is obviously enthused by what happened a few weeks ago when there's a dramatic tax cut announcement. Now, when the Prime Minister was in New York recently, he said, hold us by the 4 Ds, and he said democracy, demographics, demand, and decisiveness. And the market is going to hold him by the 4th D, decisiveness. And the litmus test of that is what you said, if they manage to push through BPCL. That would light a fire into the market. I'm old enough to remember when Arun Shourie did the IBP disinvestment, and a huge rally started based on the PSUs. So if they can actually, they have the mandate, they have the courage, and if they show the decisiveness to do an open, transparent disinvestment or privatization of BPCL, invite global bidders, and whoever is the highest bid walks away with it, I think that will set a huge fire on the market, and we'll be surprised at the upsides of the market rather than worry about the downsides.
Well, I would worry about the 3rd D also, wouldn't you, Mr. Damani? Demand.
It is. It has been a problem that's caused a slowdown. But we're unleashing animal spirits. By the time we're releasing the tax cuts, doing privatization, as the market goes up, there'll be a wealth effect that will take place in people's spending habits, in people's consumption habits. And the government, for whatever it's worth, is going to focus on investing, not on consumption, because the way they've put the tax cuts rather than the GST cuts, the way they are trying to put Make in India. So it will be investment-led growth ultimately taking place in India, perhaps.
No, I guess that quite clearly is the strategy to boost investment. But you boost investment when there is demand. So once again, I'm coming to it. Interest rates have been cut, but for a whole host of reasons, it's not cut across the yield curve. Even for the government, it's not all that cheap. At 6.7 10-year is not really cheap, but you know, there is a hope that it might. There is this loan sammelan which has been organized, and there have been discounts also that car companies are offering. Is all this enough to at some point kickstart demand? I mean, do you expect the festival demand would be a good beginning of a new
I can't say for sure. I don't really know. I don't look at the aggregates of macro that much. But I can tell you that the base effect is going to kick in the next quarter. That will start lifting up there.
October itself.
From what I talk to people anecdotally, even in the worst sector, in the auto sector, in certain segments of the auto, there's actually a backlog waiting a couple of months to get that. So I don't know how this actually plays out, but I knew that the government had to act decisively because there was an absolute sense of pessimism and given up feeling, which is gone. Suddenly you go back, the rooms are full of smiles and people are talking about capital expansion plans and what shares to buy. And that will unleash animal spirits in and of itself. And I think better days ahead. I strongly believe that. It's a good time to invest, actually.
I take your point. I think it became a self-fulfilling prophecy.
Yes,
you know, the negativity was feeding on itself.
Exactly.
But the other important thing I wanted to ask you about was the government trying to embrace FPIs by coming out with a lot of reforms, whether it's, you know, abolishing this additional surcharge on capital gains or even simplifying KYC norms. You think it's enough to bring the money in?
I think so, because that's exactly what he went to New York to do, and before that he reduced the tax rates and the Make in India contract manufacturing 15%. So that will bring it in India. We're at a sweet spot right now because there's problem in China, you're over-concentrating on China. For example, just to give you some anecdotal evidence, we all talk about autos or whatever, but a lot of the APIs that our drugs use are coming from China. There's almost a stranglehold on the APIs. And now India is a great place to come and move into those APIs. You already have some market share. We'll probably gain more market share. So when you set up new facilities with low tax rates, that would encourage investments coming into India. I think, you know, the government had to move to do something, and the government is, you know, wants to spend a lot of money on social infrastructure, water for all, housing for all. Where is the money going to come from? The money has to come from privatization. That is the missing jigsaw. For 20 years, we've said it's an idea whose time has come. And hopefully the idea actually has come this time, because if that doesn't happen, if, for example, the government again dilly-dallies on that or doesn't show the political courage to do that, I would turn, you know, more pessimistic on the market. So my hope is based on the fact that they have already pushed through the tax cut in 3 days without anyone knowing. They just pushed it through. That they will push through a privatization. That is enormous value unlocking. In fact, one of the IPOs that are, as you mentioned, is listing today, IRCTC. extraordinarily good IPOs. Look at the whole public sector. People make a huge mistake, Sonia, in understanding the public sector, and I've watched them for 30 years, is they lump the baby and the bathwater together. If you look at all the public sector, private sector companies together, you'd be including with Manpasand and a few other bad horses with the HDFCs of the world. So there are some great PSUs who made investors a lot of money, 50 times, 100 times, 200 times. Bharat Electronics, CMC, Bharat Earth Movers, they've done extraordinarily well for investors, and some that have done very badly for investors. So first, we should not confuse the baby with the bathwater. Okay, there are some great PSUs. A lot of the recent listings, for example, in the railways and defense, offer extraordinary value. They're available with book-to-bill order books of 1:10, 1:15, Ps of 6 or 7, which even go down now because the tax rates have gone down. Dividend yields of 5%. And a good example is the one that's going to go IPO today. I think it's extraordinary, well-priced IPO, almost monopolistic business.
There was an analyst who was reasoning that because demand has not been unleashed, export companies will do well. And to be fair, both Rajiv Bajaj and R.C. Bhargav said that this extra money they have, they're going to invest in capital and become world-beating, manufacturing companies. So they are going to invest that money in exports or becoming world-beating companies. And the other, of course, as you said, India also becomes more easy to invest for foreign investors. If you agree with this argument, what would you invest in?
Well, I don't do this normal macro top-down investing. I do a bottom-up investing portfolio. So I have a list of companies that I find very cheap.
But export-oriented companies, you think?
I haven't thought of the point of view that you mentioned. It's a good point. I will consider that point of view. Because after 30 years, we're reversing the policies of globalization in the world. I've been looking more at domestic companies because they will participate more, and particularly the public sector stocks, which have been a favorite of mine for the last 6 months, because I find them extraordinarily cheap. And the government is moving to stop this unnecessary dilution taking place, privatizing. Corruption has come down, so this PSU will now be better corporate governance out there. They're too cheap, Lata. I mean, my whole point is that they're too cheap. You have to look at these stocks.
No, Mr. Damani, you have been a PSU bull, and you are vindicated certainly in many cases, especially in all these recent railway listings as well. But this ETF becomes a nag.
That I agree with you. I think there'll be a lot of representations made by the fund industry to Delhi to stop this, and hopefully they will listen, like they've listened to a few other things. I agree that has been the huge overhang on the market and huge destruction of value. I think people have met the Niti Aayog chairman, people have made presentations to DIPAM, people have made present PMOs. I think they will stop that soon, because you're right, it has to stop. There's no question about it.
What's your pecking order in the PSUs?
Well, a lot of the recent ones that got listed in the defense, some extraordinary companies are listed out there with a lot of technological skills, which no one else can replicate, even in the private sector, are there. Those look good to me. The railway PSUs, the whole basket of them, all of them are pretty strong. But particularly the one that I can freely mention, they're not listed yet, IRCTC.
I want to play the devil's advocate here. Of course, great company, IRCTC. It's debt-free, valuations are not that demanding, etc. But then the whole thing with PSU companies is these regulatory changes, right? We had that service charge which was suddenly revoked, and then there was this revenue loss for the company. That becomes a bit tricky for investors.
It's in the price. I mean, you think about it from another perspective, Sonia. First, they're monopolistic businesses, right? So they do have to answer to a regulator because they are monopolistic. They get a monopoly for that reason. You know that we used to raise oil prices 50 paisa, petrol price 50 paisa, and you guys would be on the petrol pump asking investors' reaction. Mamata Banerjee would walk out of parliament, and the whole country would be talking about it. And now we had, since the Saudi Arabia oil strike, 2.5 rupee increase in petrol prices, and no one's blinked an eyelid out there. So we've gone to free market pricing in the OMCs, and that's the reason why BPCL becomes attractive as a candidate out there. So yes, there is some answer, but the delta is so great in these companies that if the government allows them to make a little bit more extra inconvenience fees, they make huge amounts of money, and then they're distributed back to you as dividends, right? So it's a double win for investors. That's why I'm saying that we roll with the tides. Yes, if there is going to be a backlash sometimes, but ultimately the arc is towards free pricing, free markets, as we saw in OMCs. So there's no reason to believe that railways will not be allowed to do that.
Okay. Well, let me just put my pessimism out of the way. Are the finance sector problems kind of in the price?
Probably not. I mean, I worry about it. I share the pessimism on the street on this, that this is a slow-moving train wreck, and I don't know. I mean, this is a bit above my pay scale. I've tried to avoid
Your
those
pay
stocks.
scale, please.
I've tried to avoid them seriously because you don't understand. Like you said, this morning PMC came up with a problem. Few days back, some other company came out with the problem. Where does it stop? I don't know. Is it all in the price? Probably not. Would I buy something into the sector looking at the bargain? Probably not.
Okay.
Other than the ones that are, the pristine quality companies like a Bajaj Finance or HDFC. So, I share your fear about problems there.
Mr. Damani, you've, suo moto helped our viewers analyze the IPO that's on the anvil. As well, you've given them some ideas of how to think about very valuable and still cheap public sector companies. Leave us with a few more ideas. Would you like nifty companies? Would you like mid-caps? And if it is mid-caps, what are the sectors you like?
Again, I do a bottom-up mid-cap, so I'm not really per sector, but this market has beaten it down so crazily. I mean, I'm actually buying stocks at, EV to earnings of 3, or dividend yields of 5% in the private sector. I mean, the market has absolutely been ruthless. Wherever it felt there was corporate governance was slightly askance, it has completely knocked down the valuation of these stocks, and very unfairly in my view, because these companies are good dividend-paying companies, fairly good high corporate governance standards. So I think for people like me, it's a stock market paradise. You kind of go find bargains in those stocks at cheap multiples. And we've seen the cycle play out so many times that people throw the baby out of the bathwater. They don't understand in terms of panic, they just want liquidity or go to large caps. I've never had that view. I think you always look at stocks on its individual merit, and that could be a large cap and could be a small cap.
Okay, by the way, we are celebrating our brand new studio, but Ramesh is also celebrating a brand new granddaughter.
Absolutely,
so
absolutely.
Congratulations to you and congratulations to us, and thank you so much for being here.
Well, I'll guess who gets to announce the baby's name on television, so I'll do that. We just named her Arna, which is a derivative of goddess Lakshmi, and she was born on the day the market was up to 2,000 points.
Wow.
So we think it's very appropriate.
How lucky is that?
And I'd like to wish the parents the best.